What's good, people, traders, and dedicated gold chasers? Welcome back to the Modern Day Trader with your boy Marcy, and we're back with another weekly review. This week, I wanted to give you guys a little bit of an in-depth breakdown of how I look at the charts to examine whether I had missed trades, whether I had trades that I could have performed better on, whether there's something that I can learn or observe and ask questions about in my trading plan. And it's pretty simple. So we have the week broken down, and we just pretty much looking at the highlighted in green sections, which is London session on each particular day. So you'll see there's five sections that are highlighted, as you guys know, Monday through Friday, the trading days on currencies. So without further ado, let's jump in. So coming into the charts on, so if you did your analysis Sunday going into Monday, you were pretty bearish in that the previous weekly candle closed bearish. You're anticipating that the next weekly candle is going to push bearish. With that being said, we anticipate the high of the week being created early on in the week, just because naturally 80% of the time that happens and that occurs. So we're anticipating that Monday, Tuesday, the high of the week will be created. Then Wednesday, then like late on into Tuesday, Wednesday will have an impulsive push to the downside, with Friday alternatively creating the low of the week and the wick on the weekly candle. So let's just jump straight into the breakdown from Monday all the way through to Friday. So you guys can see I have already denoted on the charts my break-off structures. Uh, as I was working through it, naturally I was just doing what I needed to do to review the week. So you can see that coming into London session, you can see that we were pretty bearish. We had broken below these areas. So these were the lower lows created on Friday. Thereafter, lower high, pushing down to create the lower low, and then the lower high, lower low, lower high, lower low. Now this section right here is our trading session for Monday. Now generally the way I trade right now is that we're looking for price action to pull up all the way into a key area on the 15-minute time frame. However, as you can see, that price action never actually pulled up into a key area in on the 15-minute time frame. Now we did subsequently break lower lows. I'm not really trading the breakout method anymore just because I'd rather trade with pullbacks and price action actually coming into a key area in the market. Now, what I have observed is that multiple times over this week, I think it was 2 out of 5 times where price action had actually pulled back into around about the 61.8 area on the fib. So we had the impulsive push to the downside pre-London, actually late Asia. So you can see that this is in the 4 to 8 o'clock candle. So late Asia, we had a push to the downside. And then after that push, you can see that pre-London, we had a pullback. And then around London Open, you can see that the impulsive push to the downside. Now, what I've realized is that if we just decrease this zone to around an hour before London session, which is pre-London, and then just around a hour, like an hour after London Open. So London Open is at 10 a.m. South African Standard Time, and then obviously pre-London would be the hour before that. So 9 to 10, and then 10 to 11 would obviously be the first hour of London Open, where majority of the volume comes in for London session. And if you are a day trader, you want to be looking for entries around that time. You either getting taken out in that time, or you getting a very impulsive push in your direction. And what I've noticed is that if you just look at this time like area, this 2 hour time area for entries, you will be able to see that price action usually magnetizes to an area of a retracement area in the market where price can impulsively push in and around this time. So now we know that we have the time. That's the reason why I trade around London Open, pre-London to London Open, and then also New York Open, just because these are times where the market is very volatile and you can see volatility step into the markets. So we have the time of day Then what you can see is the price action had actually come back into this break of structure area, which is essentially a key area in the market, but I don't necessarily count it as a key area in the market. But if you were to place a fib on this impulsive push to the downside from there to there, and you expand your fib slightly, uh, if you expand your fib slightly over, as I mentioned, you can clearly see that price action had actually come into the 61.8 fib. Now, that doesn't mean jack at all to me at the current moment, but what you can see is the price action had impulsively pushed to the downside. Now, as I mentioned, this sessions are here to notice and just to note down what observations you make in what key levels price action can get up into other than your key levels in the market, such as your order block or your like your deep pullback into a double top, double bottom area. And what I've noticed is that out of this area right here, you can clearly see that price action had a clean push and a clean impulsive push to the downside in that instance. So very clean movement on Monday. Did I personally get any trades? No, just because we clearly didn't get a pullback into what was known as our area. Then you can see we formed a new lower low, getting the break of these previous lower lows. That then in turn meant that we now had a new lower high in the market. So we can get rid of this area, and then alternatively, you can see, or subsequently, pardon me, you can see that we had push to the upside, forming higher highs, higher lows. We had a break of structure to push to the upside. We then had a pullback where price action had actually broken below these lows here. So that's a break of structure to the downside. And you can just see on Tuesday that London session was pretty range bound, not moving above the previous higher low or above the previous higher high. So that is a session where in and of itself, you just stand out. You just don't do anything at all and you just wait, right? Then now what you can see is that price action, as I mentioned, sweep these lows. We then push up to create a new higher high where we broke above these previous Asian session highs, right? Which is very interesting because we're breaking above this previous, that's just Tuesday's Asian session highs, and then we're breaking above it, and then Wednesday in Asia or pre-Asia we formed new highs, but it's not even a solid higher high. It is a higher high, but something that looks somewhat of a sweep to the upside. And if you just pay in mind what I said, that we will form the high of the week or the low of the week early on in the week, what you can see here is that Wednesday, early in Asian session, we swept these highs right here and collected liquidity, sorry, and then you can clearly see the price action now starts to break structures that it was formed, and then you can clearly see that price action now starts to break to the downside, and we go in with that momentum Wednesday, Thursday, that we are going to have impulsive pushes and impulsive nature in the market to push in the direction that we anticipated on Sunday, which was bearish, right? Especially after you have these confirmations where you can see the price action clearly broke above with this 15-minute candle, then impulsively pushed back down to the downside. So those are things that you need to note in in the markets. So we get the break of structure right here. You just you just start to ask yourself, okay, price action pushes to the downside impulsively from here. We have a low in the market. We pull back, lower high, lower low. Now, is there any clear area in the market that you could have entered? It's a bit tough because I mean, if you're gonna be looking at this as an area in the market right here, it's really tough because I would have liked to see a bit of space in between price action maybe pushing to the downside, and then but from here if we go down 9:45, 10 o'clock, if we go down to the 1 minute time frame, and you just go to, that was Wednesday 9:45, Wednesday 9:45. That should be in around these areas. Now what you're going to simply be doing is looking for breaks of structure to the downside on the 1 minute time frame. You can see that we have a break of structure right here. Then we have an impulsive push to the to the upside back uh into these areas, points of interest, and then you can see the price action now starts pushing to the downside. Now, if we take a trade from here, our stops sort of had to go above there for a 22 pip stop, and ways are one-to-one areas right in and around here. We would have gotten taken out the break even before price action then pushed to the downside. It just is what it is. There would have been one trade, one missed trade for the week. It's just interesting to note that once we had clear area in the market right here, you can see price action pushed away for quite some time, and then we came back into that area. You can see that we had an impulsive push to the downside to into these lows. Now, yes, we didn't create equal lows at that point, but you can see that we had clear pushes to the downside. Let's go back onto the 15 minute. That was Wednesday. And then what you can see on Wednesday too in New York session, we had a push up breakout structure actually. What I'd note as a breakout or a breakout break back in. So we collected liquidity above these areas. If you want to call it liquidity, stops, doesn't really matter. Uh we broke above these areas. We then broke back inside, and you can see we retested that area before pushing to the downside, creating a new lower low. And then you can just see pullback, lower high, lower low, and then this is another area in the market right now that if I pulled a fib from there to there, and then I extended this fib, you will be able to see that price action taps into that 61.8 area, which is very interesting and something that I want to note. If it occurs multiple times and it happens, and you can see here clearly that price action actually in the session tested the lows of the previous session. So it is something worth noting. Then you just need to start looking at where do my stop loss go? Does my stop loss go above the previous lower high that was formed, or does it can it go be above the previous fib level, which is the 78.6? It's things like that that like keeps your trading evolving. Price action is clearly moving in a trend right here. Price action is clearly doing what we anticipated from a weekly perspective, and you can clearly see the price is pushing to the downside and moving in a way where you what you want to see happen basically, and what you when you start anticipating things in the market and you can clearly see the price action is pushing to the downside, then you can start to look at these things because you can clearly see that from a 15-minute perspective and structure. What I would have been looking for is for price action to come into this area right here on the day, and you can clearly see the price action did not. We struggled. We left a lot of imbalance there to the upside, and then we just came into that 61.8 area, fell, met equal lows, and then you can clearly see that clears the clears the movement for that session. And you can see, as I mentioned, in around that 9 to 10 time frame, you can clearly see price action taps into your area, and then you clearly have an impulsive push to the downside. Now, moving on to Friday, uh, you can now see price push down. We had a pullback. Now this right here, is still your previous level. We didn't need break. Once we broke this area, you can clearly see that now is your previous level, previous lower high. We then have a pullback. We have a push to the downside, breaking the new lows. And now what do you have? You have, and this is in your session. So let's say before the session, this had not happened yet. You have these lows being created. You don't know where price action is going to pull back or push in that matter. You know, you anticipate in downside movements in around the times where we usually trade between 8 and half past 11, quarter to 12. And now all you need to do is start anticipating where price action could potentially push. Now you can see that this initially was the low, and then we spiked that low. So this becomes your new low. You're still anticipating that price action will come all the way into this area right here. However, price action does not come into that area, and we unfortunately don't get a trade in London session. Now, where on the fib did it pull back to? If we pulled it from here all the way down to there. And now you can see we missed it by quite some space in the market or price action in the market. However, it's fine. You're not always going to like meet those certain criterias. So what we've learned today is that essentially when you're looking at the market and the market breakdown, we missed one trade that would have been a break even. And that was on Wednesday in these areas right here. We missed that one trade. Other than that, we've had a observation, and it's worth testing that observation that when price action has made an impulsive push in Asian session and we trade in London session, is it worth taking a limit order on 61.8 fib? Uh, in the London session, or is it not? And what are the stats on that? Where should your stop loss be? Should your stop loss be above the previous higher low or lower high, or should it be above or below the 78.6 fib at the time? This is obviously when you are in trending conditions from a 15-minute time frame and a higher time frame. If you have a clear bias, you can see that on Tuesday we had no clear bias, so we couldn't even observe that. You can see that price action had done nothing as we just were in between these two areas. There were no clear impulsive pushes such as this, and then also such as this. You can see when you're coming out of Asia, when you have an impulsive clear push to the downside or to the upside, those are the times where you can use the Fibonacci and like start to anticipate if price action does pull into these areas, will we then be able to use this tool? So that's an observation, and that's something worth me testing going into the next week and potentially adding to my plan before we actually wrap up and finalize the plan. So guys, I hope you enjoyed this breakdown of the market. You guys saw that like on my current plan, I've missed one trade this week due to me not trading just yet until my plan is finalized. I might have something to add to the plan, which is quite clean actually in my opinion. Uh, yeah. I hope you guys enjoyed the journey with me. I hope you guys enjoyed this video. If you did, then don't forget to comment down below where you guys are at with your journey. If you guys are still doing your prop firm challenges, if you guys are still working on your trading plan, whatever the case may be, let me know down in the comments down below. And from your boy Marcy at the Modern Day Trader. Have a wonderful week further. And please don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. So from your boy Marcy at the Modern Day Trader, peace out, man.